To put
All
up
right,
by.
you ready?
Yeah, bro. Yeah. I'm gonna start with the I'm gonna do a little different today, man. So I'm gonna start with the NASDAQ first, and then we're gonna go to the ES. I told you I was transitioning to the NASDAQ, and I've officially transitioned to the NASDAQ. So we could start with the NASDAQ first, and then we could go to the ES, and then we could go to the hood, right? That's cool.
Put a wire in the chat if that's cool.
Yes, sir.
All right, let's get to it. I got it. All right. Here we go.
Oh, he got marks on it. Man, look.
You got playing. No,
Whole, whole lot.
it's not a game.
Whole lot.
So I'm gonna wait. I'm gonna wait a little while. I don't know if Maul come in or not. I'll give him like a minute or so. Oh, he could watch it on YouTube. So so basically this is the daily setup. This is the daily setup on the NASDAQ. You have your daily range set, right? You see the range, high to low, low to high. You see that? All right. So we have PD arrays, we have PD arrays in the premium, we got PD arrays in discount. Y'all see that? Oh, y'all need me to point it out.
Yes, sir.
All right. So of course we already know what premium is. Premium is anywhere from 61 to 76% and higher, right? And discount is 38.23 below. That's your discount. Right. So on the NASDAQ, we have a weekly fair value gap as well as a daily fair value gap inside of that, right here. Y'all know how I feel about the double whammy. When you got a weekly, a daily, which is swept liquidity, you got your gap created on both time frames, weekly, daily, sell it. But I'm gonna say this though. I want to show y'all, I'm gonna give y'all some more secret sauce right quick. I'm gonna show it to you on the NASDAQ, and I'm gonna show it to you on the ES as well. But since we're on the NASDAQ first, this is what I'm gonna do. So this candle, this red candle right here, that started the sale, the 3-day sale that we had, right? You see that? So this is what's called a price leg, right? So this candle, this wick started the price leg, right? So this last candle of the price leg kind of swept liquidity, right? So of course we swept this low with this candle, but we continued lower, right? So we swept this candle, we traded into this gap that was in discount of the range, and we also swept this low down here. I'm gonna draw a line so y'all can see what I'm talking about. We swept that low. Y'all see that? So with that being said, this price leg swept liquidity, right? So then now the market reversed. The next 2 days was kind of muddy, right? I remember us talking about these two candles in the middle right here. It was like, man, that's trash price action, right? But this candle, let me draw it out for you. This red candle right here, I could draw that a little better, but y'all get it. This red candle now becomes a what? Once you close it,
OB.
an order block, right? Perfect. So here's what I got.
Hey, look, bro. All right, go ahead.
What you got, bro?
Nothing. Go ahead, bro.
All right. So this candle on August 8th or 9th closed above your order block. The reason why this is an order block because it swept what? Liquidity.
Hey,
Uh-huh. What you got, bro?
let me know when you have another question. We're gonna randomly pick people. I'm tired of trying to answer everything.
All right, I like that idea.
Oh, crowd participation.
I like I like that idea, Winston. So this candle, I remember saying that the strongest order blocks sweep liquidity, right? Whether it's external liquidity, which is a low or a high, or internal liquidity, which is a gap. That the strongest order blocks gonna give you a sweep of liquidity, right? So market reverses, trades back into the range, closes above this said candle, uses it as support. See that? Follow me. Follow me. Now, this is what happens. The price leg all is on that sweeps liquidity. The price leg that sweeps liquidity. Write this in your notes. The price leg that sweeps liquidity, when the market reverses, that price leg is going to get swept.
One more time, Sensei.
With the price leg that sweeps liquidity, when the market reverses, after it grabs that liquidity, the leg that swept the liquidity is going to get swept. So basically, if you was a swing trader, right, you get long, let's say you get long from this order block, and you be like, all right, this is my price target right here. Right, so from, hold up, give me, so from 18,412,
Hey,
all right. What
you
you got?
said you said the price leg
That sweeps liquidity.
sweeps liquidity. Well, you
Yeah.
just marked this. I heard you earlier. You said now how do you define the leg again? Because you're talking about these three candles. I remember that.
Yeah.
But
So
it's
that's the leg
any
that
three
sweeps liquidity.
candles.
Look, this is the daily. I'm gonna show it to you on a smaller time frame so you can see
Okay.
what the smaller time frame is.
Four of them.
But
So Pam, you got the price leg. That's all right, go ahead.
so
Go
you
ahead.
see,
This is
so
a
you see,
leg.
all right. So this is the leg, price leg that sweeps liquidity. You see,
When you go through the whole move again, I just want you to define a leg again. That's all.
okay. All right.
What I'm doing.
All right, I got you. So basically, a price leg is, it could be one candle, it could be three candles, it could be five candles. But once it sweeps liquidity, you're looking for liquidity to be swept, right? And I'm gonna show it to you on the smaller time frame so you can see it. But this is just a daily. I can show it to you on the monthly. I can show it to you on the weekly. But I'm gonna focus on the daily on down. All right. So this is the lead. Boom, boom, boom. Swept liquidity, trade back into the range, right? Reverse, we treat this candle as an order block, trade down to it, take out the high. So you need a reason to trade this, right? You need a reason to take this trade. So sometimes when the market reverses, it might not always give you a fair value gap. It might give you an order block. Order block taken, high, taken out, boom. Now after we take this high out, notice how we just consolidate.
And you got the gap here.
Yep. And to fill the gap, we consolidate here, boom. Fill this gap.
No,
Now,
the other one.
I know this one right here.
No, go down. Where it all started. Right on
Oh,
top
right
of your
here,
auto block.
right here.
Yeah.
Yeah, that's a
No, go like the whole joint.
right here.
No, the ABC, the old gaps that you used to trade.
Man, I don't know what you're talking about, bro. Now you're confusing the people.
Oh, you mother
I don't know what you're talking about, bro.
this man with third state. Hold on.
What are you speaking of? All right. So anywho, Oh, yeah, here you go. All right, what you got, brother?
That's a gap, right?
Talking about this volume imbalance and this
No,
gap?
this
Yeah,
whole
yeah, yeah.
gap, A,
Yeah,
B, C.
yeah, it filled that gap. But I'm not, see, I don't
Oh,
trade like
branch. Don't be listening to this dude, bro.
he know I don't listen. He know how I rock, bro. He know I'm not I don't rock with
You
the
ain't never going back, huh?
I ain't going back.
Running all stop signs, man.
But bro, so
It's
look,
up. Let me
hey,
teach you,
can you
bro.
remove your drawing off the chart, please, sir?
I'll do it. All right. Go ahead, brother. I'm sorry.
All right. But I just want to show y'all this, okay? So just looking at the price action, right? So price lead, that sweeps liquidity, market reverses, we take out that lead, right? This is the high. Notice we fill this gap, we consolidate a little bit, play ping pong a few days, trade a little lower to fill this gap. Now, I ultimately believe that price is going to return to this gap. We have resting liquidity here at this high. We got resting liquidity here, and we also have premium PD arrays, right? So I'm looking to sell this. I'm looking to sell the Nasdaq when it comes here. But I'm looking to buy it up to these gaps. So whatever the market gives me to buy, I'm bullish going into this week to take, for the market to trade up into these gaps. Now, here's what we got. Now that was the secret sauce. But here's what you got. So you got this gap in premium, you got this weekly gap in premium, you got a daily gap in premium, and you got this gap in discount. Right? So if the market would, for instance, if the market were to trade back down here first, you buying this gap because it's in discount. You buy the discount, you sell the premium. You buy the discount, you sell the premium. So when price gets up here, you looking for something to sell. You're not looking to buy. You're looking to sell premium. You buy a discount. Now, Winston, I'm gonna show you this on the 1 hour time frame. The price lead, right? Happened Friday, right? So here you go. Price lead sweeps liquidity. This price lead, right? You have resting liquidity below this low. I have my sell side liquidity down here, but we stopped here. Okay,
But is it the three candles that's your price lead?
the price leg that sweeps liquidity. So if the price starts here, candle open here, traded higher, started trading lower, boom.
Oh, okay, okay. Oh,
You
I
see
was looking
that?
at these other three candles. So you're talking about these right here?
I'm talking about this
Right here. Okay, I
green, this
got you.
red candle right here
Uh-huh.
that started selling.
Okay.
Right? You see how we swept this low
Okay.
and traded right back into the range.
Okay.
That's your price leg. That's swept liquidity. Boom. You find a lower time frame reason to buy, and you take that entry all the way to this high.
To sweep to sweep that one.
Because yes, sir. You take it to that high, and now this ain't happened to it. If I remember correctly, this happened at probably at 258 when it took this high out, but it happened, and I'll show it to you again. I came prepared today. Let me show it to you again. Here we go. Look at it. Now it give you a PD array on the 1 hour on this one. Price. So we sweep liquidity on this high. We swept this high right here. Boom. We reverse. We go back and sweep this low. Right. We sweep this low. Trade into this gap. Right. Liquidity. We know internal liquidity, external liquidity. We know that's liquidity. We sweep reverse. Gave you a gap. 1 hour gap right here. Boom. Traded into it. Right here. It gave you it put some heat on you, but it respected the gap. Guess what it did? Took out this high. Took out the lead that started to sell. It took it out. So, and I remember telling y'all, like, all gaps are not created equal, right? So you got these gaps on the NASDAQ, these 1 hour gaps, and it looks enticing, but all right, we trade back into this gap, I'm selling it. But what's the reason why the gap was made? It's always a backstory. Like, it's always a backstory to why the market is doing what it's doing. And once you realize what the backstory is, you'll say, oh, we sweeping this liquidity. Oh, we trade into this discount gap. This gap is in discount. We reverse, boom. Create another gap to the upside, you take that gap all the way to this high. Then that was probably about a 700 point move, 500 point move, something like that on the NASDAQ, right? But if you don't know, you don't know. So this is why I'm giving y'all the secret sauce. And it's the same thing on the ES too, and I'm gonna show it to you on the ES. I show it to you on the 4 hour as well. So just like on yesterday, I'm sorry, on Friday. Sometimes it's one candle, it's a 4 hour candle. This candle printed for 4 hours. So on a 1 hour is one candle. No, I'm sorry, on a 4 hour is one candle. This candle right here, swept liquidity. Boom. I'm thinking it's gonna come take this low out, but no, it's saving that. Okay, cool. Took this low out, traded back into the range. Gave you a PD array on a smaller time frame, take it back to the high. Right? So now I'm gonna show it to you on the 5 minute. All right. This is the price leg that started the sell, right? So even if you sweep, so look, check this out. This high didn't sweep any other high, right? It didn't sweep anything. So in my opinion, this sell, it didn't give me any indication or any entry to take it, right? And sometimes that happens. It's going to happen from, here and there. So that's cool. All right. So now you look at the market from you zoom out, be like, okay, so where can we be going? All right. So from a 1 hour perspective on the NASDAQ, you had lows down there, you had the gap down there, right? So I'm sorry, you didn't have a gap, but you had this swing low, and it was also a 4 hour low, right? So you see how the market responds to it, and then you just wait and see if it gives you entry to the upside. It does give you entry to the upside, right? So we swept the low, we manipulated a little lower, created a gap to the upside on a 5 minute. You see that? So this is your manipulation leg right here. This gap, once we close above this gap, it lets me know, okay, it's time to go higher. So this is the gap that it gives you. It gives you this gap, it gives you this gap. Notice how we trade into this gap right here. That's your PD array. Take that gap to the high. So you're setting this trade for about 2 hours and some change. I hope I'm putting it together for y'all. 1 + 1 is 6. So when you see this on a 1 hour time frame, I'm sorry, when you see liquidity swept on a 1 hour time frame and the market immediately trades back into the range, that means that big money, hedge funds, all those people are in position for the market to go in the opposite direction, meaning for the market to go higher. Because if the market wanted to continue to the downside, it would have closed below these lows. It would have came attack this low, attack this low. It would have kept going. But we swept liquidity, reversed. Traded back into the range. It didn't give you no PD array on a 1 hour. So now you got to go down to a smaller time frame, i.e. 5 minute, 3 minute, 10 minute, whatever your cup of tea is. So this is the price leg that swept the liquidity. Swept the liquidity, reversed. Okay. Give you a 5 minute gap to trade. You take that 5 minute gap all the way to the high. It's the same rules apply. So I'm gonna show it to you again on the 5 minute. So even if, let me show. It's even cleaner on the ES, but I just want to show it to you on the NASDAQ first. Price leg, swept liquidity, right? Swept lows, swept these lows on the 5, right? But of course, we using a 1 hour premise because higher time frame. It's a higher time frame liquidity sweep, 1 hour, right? But we just look for entry on a 5 minute, like bread and butter, 1 hour, 5 minute, 5 minute, 1 hour. They go together like cocaine and orange juice. All right. So sweep the liquidity, manipulate a little bit, trade, immediately trade back into the range, right? Immediately. Close above this gap. So once we close above this gap that we created to the downside on the 5 minute, that should let you know that, okay, we're going up. We headed to the upside. And plus, we swept liquidity. It gave me a gap to trade. I'm just going to be patient and wait for this, for us to trade back into this gap. Now, you could get overzealous and say, all right, well, we close above these down close candles. I'm gonna take entry here. And that's fine. You could take entry there, but you got to be patient because the market decided to trade back into this gap. If you are more comfortable trading gaps, then wait for the market to trade back into the gap. If you're comfortable trading order blocks like this, you're gonna take a little heat. Not every time, but most times you're gonna take a little heat when you trade the order block. The top of this candle, because as you can see, it traded back to it here and traded higher, and then it traded lower again. So now you got your gap is your last line of defense. You enter your gap, take entry at your gap. You could take entry at the top of the gap. You could take entry at the middle of the gap, at the bottom of the gap. Solely up to you. I'm always in this area. Like in this area, I'm looking to take entry because the market is showing you its willingness to go higher. So once we trade back into this gap, my price talker is the high.
What else you seeing, Sensei, that helped give you that direction other than, going from rocky to smooth?
So
From like,
it's a 1 hour. It's the 1 hour and it's a 4 hour. So it's a 4 hour low right here that we swept, right? This 4 hour low right here that we swept. I was thinking we was gonna come get this one, but we didn't. That's fine. I don't have no control over that. We swept this low and reverse. See, once a low is swept on a high time frame and it trades right back into the range, that's my indication. That's my indication. Same thing on the 1 hour. Once a low is swept and it trades right back into the range, that's my indication. So I know you've been watching ICT videos, right? And he indicates time and price. Time and price. So it's always a time thing with these. So the gap was created during the lunch session, and we traded back into it during the PM session, right? Now, I'm gonna do you one better. You might not be comfortable taking this trade. You might need some more. You might need some more proof that we're going higher. Cool. Then you wait for your silver bullet. Your silver bullet happened here. Trade it back into it, right here.
so pretty much on the full, you took the CE of that gap that's between the 29th.
No, I took the sweep gap. Once liquidity is swept and the gap is made in the opposite direction on the 5 minute, I'm taking this gap.
Okay, I was looking at it from the full
high
out
time frame.
Yeah, I see. There's a gap on the 29th.
This one.
From if you look at consequent encroachment of that one, where you move over to what it is, the 30th, that 1400 candle, the bottom of that run right into it. Yeah. That's CE of that gap. That's what I thought you were looking at. Okay.
Yeah, see, now you're complicating things. I'm trying.
I'm up. Look, I'm trying. I want to know your reasons. That's all. I ain't trying to complicate.
You complicate things. But so all in all, bro, when a 1 hour, and a 4 hour. So for me, the 1 hour and the 4 hour, that's my high time frames.
Gotcha. Okay.
So for like daily, weekly, monthly, those are the highs are the high. But as far as us trading on a daily basis,
that's you look to the 4 and the 1.
Yeah.
Okay.
So if you got a 1 hour low as well as a 4 hour low, and we sweep it and we aggressively trade back into the range. Now I'm looking for a lower time frame PD array to trade to take it the rest of the way.
Gotcha.
You know what I'm saying? So,
Mike,
yes,
quick
sir.
question. Go back to the other one.
Which one? Which one? The day?
The one you were just looking at.
1 hour?
Yeah.
Mm-hmm.
But whatever one I don't know.
Okay.
It wasn't those candles.
All right.
This setup.
Yeah.
So why is this the low?
Mm-hmm.
Can you move your cursor over? Or you want me to draw it?
Right here.
Yeah, is that the low or this candle up here?
So I'm gonna show you, bro. This is a low,
Mm-hmm.
as well as this being a low.
Okay.
Right. So I'm gonna say this: when a market leaves resting liquidity like this, you see, let me put it together for you, dog. The market left this resting liquidity, left this gap untouched. All this is in discount of this range, right? So it left this for a reason. It's going to return back to it. And when it returns back, it's going to be extremely aggressive to the downside.
Now, is that predicated on that low being, because it was also stated like this low is red.
Yeah.
Are they going to go to the true low, what you would
This one.
call this green one?
Right here. Yeah, it's coming for sure.
Mm-hmm. Okay. So I guess like the same thing Mr. Branch was saying,
Mm-hmm.
what makes me get into this sweep and not the next one? Like what makes you take the sweep of this low and not the sweep of the other low?
Because you look at how the market responds to it. So for instance, so we swept this low, right? And the market immediately traded back into this little 4-hour range right here.
Okay.
You see that? And then now now it makes my Roach antennas go up now, because now I'm looking at, now I need to go to the 5-minute and see how these candles are printing. Right?
Right. So your entry, this is a 4-hour, obviously. Once you've seen this traded back into the range after it took out that one low,
mm-hmm.
you're going to your 1 hour, 4-hour.
Mm-hmm. I'm going to the 1 hour. I'm going to the 1 hour too. I'm like, oh, look, it traded back into the range.
Okay.
This candle traded back into the range, and it, okay, consolidating a little bit. So now I need to go to a smaller time frame to see if it gave me a reason to buy.
And you kind of got your
reason to buy right here, your gap.
Okay.
You see that? So, but it's context, right? So all right. So just like this. So let's just say these green candles from 1140 on all the way over to the right. Let's see these candles not there. Matter of fact, they're not there. Right. So if you just looking at this price action, you clearly say, okay, the market, we about to keep selling. Right. But you waiting for a reason to sell, right? So you wait for the next candle to print, boom. All right. So damn, we swept the low of this candle, we traded back into this candle, but it's also a gap, right? Okay. So when you have a low like this and we trade back into the gap, I'm like, now I'm paying attention, because I don't want to sell this. I'm not selling the gap, the last gap that was created. I'm not selling that. So I'm waiting for the market to trade back into this gap. Now I see that the very next candle trades all the way to the top of this gap. The next candle closes above it. It means business to the upside. So now I'm waiting for the market to trade back into this gap that was created to the upside. Because this is what it's called a balanced price range now, right? We swept the first low. Now we came back down and swept the AM sessions low right here, and we reversed immediately back into the range. See, that's why I got my sessions highlighted, right? Because it all, when you put 2 and 2 together, it's always going to equal 12. So we swept this low. So this is this is what they call the manip dip. We swept this low with this price leg, right? We created a gap to the upside. We showed that we closed above this gap. The gap got filled in one candle. Cool. All right. My premise is to the upside now anyway, because My premise is to the upside is because we swept the 1 hour low, we swept the 4 hour low. That's powerful. So now the reversal happens. It trades back into the gap that was created, and then now you take this gap all the way to the high. Now you could have took this gap to this high and got out the way and be like, I'm done for the day. That's cool. It's whatever you're comfortable with.
Right.
You know what I'm saying? But this might not be clear for you, right? It's too muddled. There's too many candles. I don't know what's going on. Cool. That might be that silver bullet happened. You know, the silver bullet in the afternoon session happens between 1 and 2 o'clock. Right?
Mm-hmm.
Gap created here. A, B, C. C is 1, 2, 3. You know how it go. Trade back into the gap. We trade back into it.
Sounds good. I like it.
Immediately get out of there. Right? So you trade back into this gap. You take this entry, you might be like, all right, cool. Where's the next high? You'd be like, all right, I'm taking it to this high right here. You might not have the courage to stay in the trade to this high. But each time you enter the trade, you have to have a price talk on where you're getting out.
Mm-hmm.
You got to have a price talk. The market is always looking for liquidity. So going back to the 1 hour, price leg that swept the low, reverse, trade back into the range, 5-minute gap at the bottom, you take it all the way to the high. 200 point trade, if I'm not mistaken. Something like that. Almost 200 points. A little bit less than 200 points.
Mm-hmm.
Now, this is the NASDAQ. Now, I'm going to go on the ES and show you the same thing. But this is the Big Mac sauce right here. So if you patient enough to wait for this trade to set up, you'll be a happy camper. Now, granted, this trade didn't happen until the afternoon. Now, it did sell in the morning, and in my opinion, it didn't give me entry to sell. So if I would have took that trade, I would have just been pressing the button with no rhyme or reason. You know what I'm saying? So now, let me get a little further into it. So now, this is a price leg now. This low, this is a price leg that swept liquidity. But here's the gotcha. When a price leg produces a gap, that's a sign of continuation to the upside. Or to the downside, but since the price action is to the upside, that's what we're going to talk about right now. So price leg, boom, swept liquidity, reverse. Take out this buy side liquidity. But in the meantime, between time, we created a gap. So, and then right before market close, we traded back to the gap, use it as support. So I'm expecting the market to probably trade back into this gap, leave a low inside of this gap, and go higher. Take out these relative equal highs up here.
Mm-hmm.
Is that making sense?
Yes, sir.
All right. So let's go to the OES. Boy, remember when this candle was red? Jesus Christ. Now this the monthly on the ES. Right? So we said at the beginning of April, at the beginning of August, I'm sorry. At the beginning of August, we was like, man, this is the candle of interest right here, this order block. I said, we could trade through this order block and still respect it come the end of the month. August was standing on business. All right, so let's go down to the smaller time frames. Let's go to the daily. All right, so I'm assuming. Hold up, bro. Let me go to the weekly because I think this is a weekly gap down here. Yeah, it's a weekly gap. Right. So price league X sweeps liquidity low here. This low. We didn't sweep this low, but why, I don't even remember why we traded this low. It must have been a month, some monthly business. Let's go back and see. Oh, it's an order block. Okay, gotcha. All right, price lead. Oh, I'm sorry. Let's go back to the weekly. Price lead. This price lead, swept liquidity, we reverse. Just like I said on the 1 hour on the NASDAQ just now, right? Price lead produces a gap. It's highly likely that this means a continuation to the upside. Price lead doesn't give you a gap. That means it's going to get swept. It's called a low resistance liquidity run, meaning we're gonna go get all this liquidity, these intermediate highs as well as the all-time high. So that you could bet your bottom dollar the ES coming back up here. Weekly price lead, swept liquidity, meant business. Look at this wick. Then the very next week, created a gap, traded back to the gap last week, got up out of there. We come and get you. Let's see. We're coming for you. They're high right now. Nowhere to run, nowhere to hide. Come and get you. All right. Let's go down to the daily. Same rules apply. Price lead. Same thing, just like on the NASDAQ. Sweep liquidity, low, trade into this gap. Got up out of there. Boom. Gave you the same thing, order block. Traded to the order block. Took out the high of the leg that swept liquidity. Same thing, just like on the NASDAQ. Weekly gap right here, traded back to it.
And look, Mike, earlier you were saying, I'm going back to the leg thing again.
Okay.
So even if, say that top red candle.
Right here.
Yes. If that candle was longer and it took out this low to your left, that still would be considered a leg?
Yeah.
Okay.
It could be one candle. It could be 5 candles. It could be 4 candles.
It's whatever go take out the low.
It's whatever.
A leg.
Because on a daily, you might have more that it's going to look different if the market is expanding, like the market is expanding to the downside here, right? So it's going to look different here. But you know that, okay, from a daily perspective, you have resting liquidity here below this swing low, and you have resting liquidity inside of this gap and this order block right here. And we traded down into that gap, closed the day respecting this order block. Right? So then the next few days was ugly price action. Then we finally started trading higher, closed above the candle that swept the liquidity. You can see the last leg of the 4x4 or the 3x3, right? We closed above it, use it as support. So now if the price target is the high of the leg that swept. So now, even though you have these volume imbalances in the meantime, between time, you got this volume imbalance, you got this volume imbalance, right? The market. Okay.
Go ahead.
I'm listening. What you got?
I want everybody to go on mute. Don't listen. This is solely for Mike. He's only explaining this to me. Those green candles.
Which ones?
From the bottom.
Right here.
That took out that high. That took out that leg. You got it. This one. These. When it reversed.
Right here? Oh, right here.
Yeah.
Okay.
Now those swept that high, correct? So this is a leg going up.
Yes, sir.
From the bottom to the top.
Yes, sir.
So what would give me I'm going to be looking for something to come take out that low or that leg.
Yeah, you are.
Something to shoot that leg. Okay, all right.
But
You gotta wait for the entry.
You gotta wait for the entry, but also remember, a gap was created.
Uh-huh.
This is a weekly gap that was created on this lead.
Oh,
And
yeah,
we
yeah,
use
all
this
right, I got it.
weekly gap. So now that means continuation.
Yes.
You see what I'm saying? That means continuation to the upside. So eventually we come and take this high out.
But on the way down, that's
On
my
the way down. So we're gonna probably to be honest with you,
get another leg,
yeah, we're gonna come. So believe it, when we start trading lower, this should be your price target right here.
Okay.
51.78. Because we're gonna play around in these gaps, we're gonna trade through them. This is the gospel, dog. On a Sunday, on the Zooms on Sunday, gospel. All right. So and then eventually, you know. So now I'm gonna say this though. So by this being an all-time high, you know how the market trades when it start getting to the all-time high. So like I said, if I don't have no data to the left, nothing, I'm leaving that alone. Like I'm not, because the ES and the NASDAQ look the same, but they're a little different. Because it's gonna take a little bit more for the NASDAQ to go back to the all-time highs. And plus the NASDAQ got that weekly gaps that's gonna give it some problems, and that daily gap that's in premium. So the only thing that we got in premium on the ES is this order block right here. So that I'm waiting to see how we trade to that order block. And it should push us down, but we'll see. But I'm gonna go again, I'm gonna show you to you again on excuse me, on the ES. Now the setup on the ES looks a little bit clean, right? So on Friday, the market started selling with this candle. It ain't give me no rhyme or reason or entry to take this trade to the downside. And that happens. Sometimes a move happens without giving you entry. That don't mean that you don't know what you're doing. That don't mean that you're a bad trader. That don't mean that you missed something. It means that it just didn't give you entry. And that's fine. No problem. Cool. Price leg to the downside, right? We swept this low. Nah, it's a little bit cleaner on the ES. But, this is your low. Swept that low, reversed. Trader immediately back into the range, right? So you know what I'm going to do with this? I got to find a reason to buy this on a smaller time frame. Cool. So where we go? Handy dandy 5. Let's look at it. Same thing. Liquidity swept. So, all right, AM session from 8:30 to 11. This is the low, right? So the lunch session started at 11 o'clock. We traded back, swept this low, reversed. Okay, cool. I just need a gap to trade. Here's your gap. From here to here, you see that gap? All right, cool. We closed above this gap. We inverted this gap. That sent us down to sweep this low. We inverted that with this price leg, quote unquote, closed above it. This is your gap. Gotcha. I'm taking it to the high. Right? Now, just like on the NASDAQ, I'm going to say this. This might be too muddled for you. I don't know what y'all doing. What is this? Cool. Between 1 o'clock and 2 o'clock, you're going to get a silver bullet. Same thing happened on the ES. Silver bullet happened. Trading to the silver bullet is slight. You take this entry to the high. Or it's 10 points. You want your 10 points on the ES? That's your 10 points. You take it to the high. It was more than 10 points, but I'm just saying. So this might be too confusing for you. You might not understand it. It might be, it's like, yes, sir.
Sorry.
I'm listening, bro.
Silver bullet. Is this your silver, that's a time frame?
So the silver bullet happens.
That's a time frame, correct?
It's a time-based trade, yes. So
okay.
The first fair value gap that appears between 1 and 2 o'clock. You take
AM.
PM, this PM.
PM, okay.
Yeah. So this is it, right? Take this one right here. This is a more meaningful gap right here. So you take this, was it from 34 to the high, which is 45, that's 10 points, 46. All this that the ES did extra, that was lagniappe. I don't know what the ES was doing. I don't know what it was trying to do. But it was extra aggressive going into close Friday. But like I was saying,
the silver bullet is between 1 and 2.
Yeah, so you got a silver bullet between 1 and 2 p.m. and in the morning it's between 9 and 10 a.m.
9 and is it only on a 5-minute chart?
No, so it's sometimes it happens on the 3-minute. Like it depends. It's like you got to know what you're looking for with the silver bullet, dog.
This is all I'm saying. It's not a obviously what you're giving. You said between 1 and 2 and 9 and 10.
Yeah, 1 and 2 p.m.
It's not an hour-based candle.
No. It's a small time frame trade. It's a 5-minute trade.
Small time frame trade. A gap created between those times.
Yeah, but it's giving you. So basically, is this giving you direction of where the market is going, right? So for instance, when you see a silver bullet, when this is what you want when you want liquidity to be swept first. Okay. So this liquidity, like I said, the liquidity was swept. The 1 hour, 4 hour liquidity was swept. Then we reverse, right? Now, all right. So once the liquidity is swept, me personally, I like to catch the reversal when it happens. The reversal happened down here. Mm-hmm. The continuation of the reversal is the silver bullet. That's the continuation. So it's like you see this price, you see this happening, but all right, cool. You wait between 1 and 2, wait for your gap to present itself, boom, take your gap. So that's why, like on the ES, I was saying, like you take your 10-point trade and get out the way. The NASDAQ didn't show me a whole new life. The NASDAQ, bro, you could get the 100-point move in like 7 minutes on the NASDAQ.
Easy.
So I'm like, all right, cool. But this is the secret sauce, dog. Like this is the precision that you're looking for in the market. Like you want to be able to see these things. You want to be able to train your eye to see these things and not get overzealous, not get mad when the market is moving and it don't give you entry. Because just like right here, when the market started selling on the ES on a 5-minute, from a 5-minute perspective, it didn't really give you entry. It gave me entry. Like it gave me a reason to sell it, but I'm not really interested in selling that because it's not clean. So you got your consolidation right here. So, and then we automatically move to the downside. So me personally, oh, okay. What you got, bro?
I'm gonna wait. You can finish.
No, go ahead.
No, I just wanted to know, like, if you could give us, outside of what you just gave us a lot, but you just starting out, you're in this space, you're trying to understand it more, but you're really trying to look for direction.
So you're looking for direction?
Right. So what's something that you can give us, a simple something to look for in terms of direction? Not so much when a change is happening or reversal, but like clearly when we in a if it's a buy side program or sell side program, or like what you could see once you start to see that pattern happen, kind of unfold, give you something else to look at. Like, okay, well, it makes me feel more comfortable that it is going this direction and won't turn around on if you don't have other things.
Okay, so what you do is you look for high time frame premise, right? So what I said earlier, high time frame, 1 hour, 4 hour, right? So you look for whatever you got on the 4 hour, whatever you got on the 1 hour, right? So me, I'm a 1 hour person. So I'm looking to see what I got on the 1 hour that's going to either reverse the market or continue the market, right? Now, granted, I'm not looking for a trade I'm not looking to be sitting in a trade for 5-6 hours. I'm looking 10, 20, 15 minutes, maybe 45-minute trade, and I'm out the way. So when you're looking at a high time frame, that's why I call this the 1 hour and the 4 hour the high time frames, because it gives you premise of the direction of where you're trying to trade for the next 15, 20 minutes or the next 30 minutes, right? So what happens is you look for when you come to the market and you're looking for direction, you ask yourself some questions. You're like, okay, where's price? Where is it going? And where did it come from? Right? So if you get to the market, let's say 6 o'clock in the morning, and the market just traded off of a daily order block, right? So you know the direction now. The direction, it was a bullish order block. So whatever trade I'm looking for, it's going to be to the upside, right? So now I just need to find a reason to get in a trade. So whatever that gives you. So we might hit a bullish daily order block, and even that order block might be let's just say a 1 hour low or a 4 hour low, and we sweep that and we create a gap, right? That's what you're looking for direction. Like a lot of the stuff that happens in the market, like for instance, like it's a lot of noise, right? So when you're looking at price on a small time frame, like the 5 minute, it could be confusing to you because there's a lot of noise. You want your 5 minute, your 1 hour to align, or even your 4 hour to align, right? So just like on Friday, you had your 4 hour low, you had your 1 hour low. That's like taking cake from a baby. So like, all right, cool. We swept the low. Now now you wait and see what happens. I gotta be patient and wait for a trade setup to present itself to me. So when the market gives you context clues like this, we swept this low and we got it back in the range immediately like this, that lets me know that we about to go higher. We about to go higher. So now when I'm seeing this on the 1 hour, I'm going down to my lower time frame to look for entry. Now I'm gonna say this. This, like I said, this entry, this gap down here, that might be too risky for you. You might need some more, tomatoes on your sandwich. You might need a little bit more.
Yeah, I still got one training wheel on to the left side.
So that's not enough. That's not enough information for you, right? So cool. I'll be like, all right, cool. We trade into the gap. Now I want to see if we close above these candles, right? So once we close above these candles, all right, cool. Now I need to find entry for this trade. So you're watching the candles print higher and higher and higher and higher, but in the back of your mind, you know your price target is this high right here. So as long as we don't reverse immediately and just then shoot straight up in like 2 candles, that you still have an opportunity to find a trade. So between 1 and 2 o'clock, you know what's going to happen. You got your silver bullet. Because I'm going to tell you why. 1 hour, 4 hour liquidity was swept. The market reversed. The market traded into the gap. It lets you know that, okay, we're now offering you fair value. That's why it's called a fair value gap. We're offering you fair value to take this trade to the upside. I'm scared of this. Cool. You scared of that? Cool. Now you wait. You can wait for your silver bullet to present itself. You can wait for a closure above these candles. You can wait. It's solely up to you. But when the market is showing you, hey, we're going to the upside, we're going to take out this liquidity, then it's showing you that. But when you see a reversal, and some people don't like trading the beginning of a reversal, I'm cool with it. But you might not be comfortable with it, and that's fine. But you got to make up in your mind how you're going to trade it. You got to make up in your mind like how you view the market and trade it like such. So even us closing above these down close candles right here on a 5 minute, right? You could have been like, "Or I'm taking this." You would have took some heat. You took a lot of heat. But if you're confident in your trade, you know the trade going to the upside. You see the gap that was created down here. You go, all right, cool. But wisdom tells me, wait till the market trades back into the gap. It might not trade back into the gap. Okay, cool. The market might not give you a gap. That's fine. So you wait between 1 and 2 o'clock. Give you a silver bullet. Market gives you a silver bullet here at 125. Trades back into it at 135. You enter your trade at 56.34, probably out 56.36. Let's say you enter right here. You take it to this high. That's a 10-point trade. One contract, that's $500. Two contracts, that's $1,000 on the ES. Three contracts, $1,500. Four contracts, $2,000, so forth and so on. So this is how you know what side of the market to be on. Liquidity, you're looking for liquidity, whether it's resting liquidity or if it's internal liquidity. Resting liquidity being old highs or old lows. That's your resting liquidity. Once that's swept and it's a 4-hour and well as a 1 hour and a 4-hour low, that's powerful, and it shows you how powerful it was, and it created a gap, and it got up out of that. It was so powerful on the ES that it took out this high up here. It didn't quite do that on the ES. I mean, on the NASDAQ, I'm sorry. It didn't quite do that on the NASDAQ. But see, like stuff like these candles, and it's like, you just got to know what you're looking for. I'm always looking for liquidity to be swept and the market to reverse in the opposite direction. That's what I'd be looking for. So just like on the 5-minute, let me move this out the way. So just like market close here, we swept that high, that high on a 1 hour, and we didn't reverse, but it responded to it, right? But keep in mind, we created a gap on this price lead. Now, this is a clean setup on the ES, because inside of this gap, look at what you got. What you call this inside of this gap?
That's the fifth now.
That's a what?
The concentrated encroachment?
No.
What are we looking at then?
These two candles right here. This green candle, this red candle inside of this gap. You could call it a level. Winston probably called it a level. But in ICT terms, it's called something different. But all in all, you'd be looking to get long.
What part, Mike? Where you at?
Right here. Inside of this gap.
Inside of that gap?
Right here.
A level?
Yeah, that's what I said. Winston will call it a level.
Hold on. Okay. I'm cool with that.
Yeah. So you'll be
I might call it a few things, nah. You got me all in conjunction, bro.
Yeah.
I might forget what a stop sign is.
Bro, listen. No, don't.
I might forget. Turn your camera on now. I'm put the gun on you. Don't you turn on your camera.
Now it's time for Reggie
to turn on his camera a little.
to talk about you. But no, so I just asked Brian that because he deep into this ICT, he down his ICT rabbit hole. And I try to warn him that you keep going down that rabbit hole, you're gonna find some stuff that you're gonna be like, man, what is this?
So it's too late. It's too late for that. Like I said, I only asked that question. I have my way of finding direction, but I wanted to see what else was there. Maybe something I was missing. Maybe something I didn't see yet. I didn't get to yet. Mm-hmm. But yeah, no, I'm following.
Sometimes be fucking trying to get there. I've been hearing this dude name a lot from obviously Mike, but he's starting to pop up everywhere. Like when you see a call, you like, you know what I'm saying? So
who is this?
This ICT guy.
Oh yeah.
I don't want to go on a rabbit hole, so I'm happy we have Mike here.
I'm giving y'all the best of the best.
Most definitely.
I'm giving y'all the best of the best. Like, so you could,
I feel me going over there.
Oh,
Brian
Day might want to do that.
Brian Day is he's going down a rabbit hole that I feel like I didn't have to go down. Like certain things that he was teaching, I was like, I don't need to. That's not my trading style. Like I don't need to know well, I know what it is, but I'm not going to trade no new week opening gaps, and I'm not going to trade that. I'm just going to trade the price action that's within the 1 hour time frame. Now, sometimes the new week opening gap is within that time frame, and it's a powerful trade. But I'm not going to confuse what I already been showing y'all, because I want to keep going along the same path and just keep adding to it so that y'all it can start making more and more sense to y'all, right? So
I would also say, I mean, I hate that Maul not on, but probably we need to implore that along with Mike teaching us kind of simplifying it, kind of like what Branch did today, everybody on here to go check this dude out, because I'm getting nothing but good feedback from him. So even if like
I could give y'all the videos to go to.
I was about to say, just start bagging our chat, just like throw a video up there that you probably I don't know how to go. I almost feel like I would be the next person to watch it, and then you know, we'll have these conversations kind of like almost like you and Branch having right now. You get what I'm saying? So I'm catching on to the term silver bullet, catching on to what you call in the league, because we're using different terminology for it. But if Mike put it in there, just put it in there. They ain't just like we put trades in there. They ain't necessarily got to watch it or take it. It's just this what I was talking like, especially if he put a video up and he going over this shit again, and this will just back up the Zoom that we're gonna have up there. You know what I'm saying? And just everybody, Nell, Ben, Supreme on here. Even Supreme told me about the dude also. That's I didn't know. I know, Mike, you said he had videos. I didn't know this dude was trading live.
Oh yeah, he trade live, bro.
I didn't know that. So
my only reason for doing that, Mr. Hayes, like, I mean, you know, y'all know Mike, y'all know what he's doing. So being close and seeing, I'm like, okay, it's official. But all I did, and this I was explaining to Mike, like I was already like Wicks just made sense to me. And so when he broke it down like he did, like Mike was telling me last week, like Wicks is gaps. So when he asked me what's the middle of what we're looking at right now, I go straight to consummate encroachment. What's the 50% of that gap? That's my, you know what I'm saying? And what I use for direction is what dude was talking about with more gaps. Like got new weeks and new days. That just made sense to me. But it's all still in the same vein of what Mike talking about. Cause like, and you don't need everything he's given, like what ICT is given. Like honestly, you don't. But like when you start to understand more about when Mike start talking like internal and external liquidity, it really starts to make more sense because there's so many different things around whatever your trade is that's going to help. It's like more indicators than anything, but it helps you be more confident in sitting in your trade and going in the direction of what you see. And that's what I've really been getting from it. You know what I'm saying? So
I like Mike's interest more than anything. Like it'll be like after the fact, I'll be like, oh, that was an order block, just because I'm used to gaps. But if Mike go back, we go like back to when he was talking about market imbalance, which is like a wick trade, right? What I told you, Mike, I was like, this shit trade just like a gap. So when they close inside the wick, like say down here, when I get closer, Mike, move your cursor over. That right there, when I get closer inside that wick by that red candle, I'm looking for them to put a body next to that candle. And usually that always comes as like, that's how I take my gap trade too. It closes inside the gap, retest the top of the gap, and then sell on. I've been doing that. When you put that out, Mike?
Man, that was
like the top of the year.
With the
market imbalance. Market imbalance at that time.
Man, that was almost 2 years ago. That might have been a year and a half.
I got that shit set up. Like it's a different. It ain't the same color as my gap, but I draw those out. But it's just a reconfirmation. What you saying, the same thing. It's like a gap.
Right.
The wording for it might be different now, but we on the same page.
Yeah.
You see what I'm saying?
Yeah. So
just everybody outside of these videos, check this guy out, because I'm about to start checking him out a little bit more too. Definitely on the live part if he handed out. Unfortunately for some people, they're not doing futures, so it might still be tricky.
It's all the same. So
it apply across the board.
It's all the same. But I'll say this. Like I'll tell y'all. So when you watch one video, like, so this is how I started on ICT. It was a video that he came out with, and it was called One Trade Setup for Life. Matter of fact, when I watched it, I sent it to y'all.
Boy, that thing makes so much sense now.
One trading setup for life. But guess what? So on that video, he talking about all this different stuff that I was like, man, what is order block? What is this? What is that? So once I watched that video, I went and watched the video on the order block. I went and watched the video on the silver bullet. I went and watched the video on this one. And then once you start watching the videos, you start piecing everything together. It take a while, but you start piecing everything together. That's how I'm able to come share this information with y'all, because it's like, okay, you know, this is my work. This is work for me. So y'all, you know, y'all work jobs. This is what I do.
Hey,
so it's
man,
easy for
why
me.
you gotta be like that?
No, because it's easy. No, because I'm saying it because no. Now listen. No, listen. I'm saying that because it's easy for me.
I ain't even been this appalled in my life.
Mute this man.
Oh, man.
Hey, dog.
I just stopped listening to everything this nigga said now. You had me up until that point, dog.
I was saying that because I can spend more time dissecting the information and bring it back to y'all. That's why I said that.
One day, y'all gonna be like me.
Playing patient ass niggas.
No, I'm just no. All right, bro. God bless y'all, man. God bless y'all.
40-hour fuckers.
No, I'm just saying.
Go ahead,
it gives
bro.
me more time to dissect the information and bring it to y'all, and that way I could put it in a way where y'all can understand it. Because when you go watch ICT, sometimes the video is an hour and a half, 2 hours, and most of the video he rambling. He just going off on a tangent about how people don't think you know how to trade and this and this and that. And you got to sit through all that. I've been sat through all of it already. So I'm getting it to you, like, you know, I'm in microwave form. It's a hot pocket. So, you know what I'm saying? That's all I was saying. Maybe I shouldn't have said it like that. I ain't mean to offend nobody, dog.
I mean, you say what you said, dog. I understand.
Yeah, bro. We get it. You didn't cipher
never...
through the bullshit and took what's needed to be taken out and giving us just that.
Giving y'all the meat and potatoes, bro. That's all I was saying.
Yeah,
so if it came out the wrong way, I apologize. I mean no disrespect.
We need workers.
But bro, but in all honesty, dog, this start where you where you need to be. Like if you already familiar with like some of the stuff that I be talking about, and you starting to see it for yourself on the charts, I implore you to go watch the and then the light bulb shop.
Right.
He gonna put it to you to where you got to go find it and back test it and find it. And I did all that already. This is why I'm confident in bringing it to y'all. That's all I meant, fellas. Okay, moving right along. Yeah, that's it, bro. So, but to finish off what I was saying about this is a break a block.
Okay, yeah.
So you trade back into this, you should be able to get long from here. Right. But yeah, bro, the legs that sweep liquidity, they got to get taken out. And I can show it to you on a higher time frame. If y'all want to see it on a higher time frame, like the monthly or the weekly, I'll go to the weekly and show it to you. All right. And then after that, we will go to the hood where they do the most good. So even right here, let's highlight it. No, not no circle, buddy.
And just while he doing that, speaking to Branch, been here a few weeks, but just speaking on my the journey I'm on in trading. Mike Ben told me about this dude. The reason I didn't want to go there was because it was almost like you had your career already in what you was doing. You know what I'm saying? So just putting it into what's going on in my life right now. I've been an electrician for a minute. You get what I'm saying? So I started messing with the streetcar line, which is totally different than anything I've learned. You know what I'm saying? Now, my premise of being able to do electrical work, the basis is still there. But that's going to help me out in this shit. But I don't know if I would have wanted to go to school for it. You see what I'm saying?
Mm-hmm.
I don't want to go back to school and learn how to fucking do streetcars. I already know how to do electrical work. You get what I'm saying? But if I didn't took a job to do streetcars, I might want to learn what the fuck they got going on because it's different.
Mm-hmm.
Right.
I have a little difference to it. You know what I'm saying? Mm-hmm. So I gotta look at the fucking videos. If I want to learn this other part of trading, I've never been good at price action. All right, if you about to start trading price action, trying to get retired like Mike, you might want to watch the fucking video.
I retired, boy. I work harder now than I did before. But look,
hey, bro.
So look,
well, I won't work hard.
They come with
it. All right.
I won't work hard.
This is my last example of the price leg theory, right? See this price leg, red candle, red candle, red candle. Notice how these 3 candles is printed, no gap, right? We trade down, sweep these lows, these relative equal lows down here, right? And we reverse. You see that? We reverse. Now, this is the weekly. Now, if I was to go back on the daily and try to find this, I could, but I just want to show it to you on a high time frame. So, this is the high of that leg. You see what happened, right? Mm-hmm. We swept these relative equal lows down here, reversed, traded higher and higher and higher, took out this high. But while we were doing that, guess what we did on that price leg to the upside? I'm going to show it to you. You don't have to answer. We created a fair value gap. Market then offers you fair value back into this gap and goes. Just like this. Same setup. Same setup. Same setup. So you could bet I'll bet my last dollar that we're going to take out these highs. Wash, rinse, repeat. That's it. Same thing. Take out these equal lows here, reverse, boom. It was probably something else it was probably another setup on the daily too. And we reversed and we took out the leg. Price leg, took that out. Boom. That's it. That's it. Now this is the weekly time frame. So now, I just want y'all to realize that these trades happen on the smaller time frames too. Now it happens on a 5-minute, but it's easier to see on a 1 hour and a 4 hour because the 1 hour candles give you more information. Like so it's a longer time frame, so it's a bigger candle. I see what you're doing. It's clearer. Like you just go because the 1 hour candle will be green, but the 5-minute candles, you have 3 green candles, a red candle, a red candle, a red candle, a green candle, a green candle, red. So you don't know. But the 1 hour candle is telling you, like, all right, look, we bullish, buddy. We're like, all right, cool. So what the 5-minute telling me? Okay, the 5-minute give me entry. I'm taking it. Trading price action. That's it. Same. So just like this setup happened, the same thing happening right now, right? So this price leg swept liquidity, traded into this gap, swept this low, all that good stuff, reversed, left a gap on the price leg to the upside. Notice how we didn't take this high out yet, though. It's happening. So even on the ES, you want to find trades to the upside this week. Your price target should be the all-time high. Once we hit the all-time high, get out the way. Because you don't know what the market gonna do. It could reverse hard and start selling. You don't know. But very first price target is the all-time high. So we could hit that at the beginning of the week and reverse. That's what I'm banking on happening. hit it like Tuesday or Wednesday when the market opens, because I know the market close half a day tomorrow. So Tuesday when the market open, swing, hit this high and reverse hard, trade back into this gap, blase, so forth and so on. But I just want to show y'all. So just add it to your bag or add it to, your notes. When you see stuff like this, you'll be more confident in taking your trade, especially on the lower time frames, right? Because all you need to see is a reversal. You need to see a sweep of liquidity on a higher time frame, a reversal on your smaller time frame, and your entry model, whether it be your order block or gap. That's your entry models each time. So once you get that, and when you get more comfortable seeing it and trading it, you're gonna be like you're gonna be an assassin in the market. You're gonna be an assassin, like you're gonna be a sniper. You're gonna be able to see it setting up. You're gonna see it. You're gonna be able to see balanced price range. Boom. A sell off, a quick sell off, then an immediate rebalance. Okay, that shows me that we bullish. All right. Oh, we got a gap. Okay. Perfect. I'm taking it. You're not comfortable taking it? Wait for the silver bullet. Take the silver bullet. Silver bullet gonna take you to the daily draw on liquidity each time. That's it. That's all I got, bro. So if y'all have any other, I don't want to rub nobody the wrong way, dog. Pause. But y'all have any other questions, comments, or concerns about what we went over today? I'm looking for upside trade this week, whether it's on the ES or the NASDAQ. That's my bias. The weekly is showing me that. The daily is showing me that. That's my bias. I'm looking for the all-time highs to get taken out on the ES, on the NASDAQ. I'm looking for us to trade into this weekly fair value gap, as well as this daily fair value gap that's also in premium. That's what I'm looking for on the NASDAQ. So if y'all have any other, questions, comments, or concerns, feel free to let me know before we go to the hood.
Appreciate you.
Yeah. And he said he ain't lying. Coke and OG. Boy, I gotta start paying attention to the chat. Oh, all right. So Winston, you want to go to the hood, bro? Huh?
Yeah, you ready? You can hear me, Mike?
Yeah, I can hear you now. Yeah.
Okay.
All right. All right. Make you the
got
host.
me the host.
I'm about to make you the host right now, bro. All right.
All right, y'all. The month is upon us. Big September. I'm upset because the all-time high that Mike talking about as far as ES or what's your name? We right there on the spot. 65 is the high. We're at 63. 63 68. So what that is, $1.50 or some shit like that. That need to go up. Obviously, we're not open Monday, but they do be having that little rich people trading shit going on. To where I think futures closed complete, or are they open half a day, Mike?
I think the futures market is open half a day, and the stock market is closed.
Yeah, so futures might move this to be 565. Or come Tuesday, we already at the all-time high. Especially looking at this candle right here. Although we ain't go to the high, this is still like a bullish candle to me. We tested the order block, like Mike said. They had an order block on here. as well as the monthly on the ES, right? So it's a scratch. I don't know if we could do it, but I'm thinking.
Hey, bro. Hey, not to cut you off, bro, but you can't use ICT terminology, dog, if you don't watch the videos, bro. Go ahead, go ahead, finish talking like Jay the Trader, bro.
Boy, you on one this morning. Tell
Yeah,
niggas they
you
got jobs and stuff.
partner, nigga. You ain't his
bro.
partner.
Yeah, bro. I felt like I had to get disrespectful right quick, but now I'm about to go back to it. But go ahead,
You
finish.
my partner.
Finish teaching, bro. Finish teaching.
He ain't never showed me shit. I ain't showed me the order block. I don't know that nigga. You right. Who is these niggas? I don't know him. You heard me?
Oh man. All right, bro. You know what? You know what, bro?
Who taught us about order blocks, y'all? Somebody come on. You, Mike.
I don't know.
I said that. Not because of him. I don't know that boy.
What you talking about?
But no, this is a very bullish candle. I know September is like a sell month, but I kind of got, if we don't turn around and we start trading into like the 70s, I'm gonna almost say we probably gonna be looking at 585 going off of fibs. So I'm battling with that one. And then I also told Mike earlier that if we do decide to run up there, depending on how quick it is, kind of how he was saying, you kind of watching the smaller things as they play out. If we do end up being up there like the first this week, you know, the market do strange things. This week, say next week, I'm looking to get a put immediately for the opening candle, which is going to be, like I said, probably 565. So, what they call that? Market history shows that September always closes, not always, high probability trade, 99% of the time, 95, way up there. We close lower than what we open. So if we get a run at the beginning of the month, I'm gonna be looking for it to sell off and close lower than what we opened at. So come Tuesday, everybody pay attention to what price SPY is at. If you don't know how high the bitch is gonna go or anything like that, maybe I don't catch the run up, but I'll get like a 565. If it opens at 565, I get a 565 to close out those last 2 weeks of the month. Y'all catching on to what I'm saying? Somebody see something. Somebody.
Yeah.
Somebody.
Follow you.
All right. Yeah. So like you said, we're gonna sell in September. We just don't know if it's gonna open up selling or what. You heard me? But like I said, 95% chance. Y'all just pay attention to what we open at. If SPY goes higher, my target for the high side is 85. I don't know how long it's gonna take me to realize if it goes to 85. That's what I'm kind of getting at. I don't know if we at 79. I'm like, oh yeah, that bit might be going to 85. I'm not getting that trade. Like it's too late. You get what I'm saying? So now I'm looking for that put. We running next week and the week before that. I mean, the week after that. Just get you a put for wherever we started running from Tuesday. That's all I'm saying. And you're getting that for the end of the month. Y'all going out. So you kind of wanted to run a little, y'all wanted to run to 570 and then be like, I'm about to go get a 565 put for the end of the month. That's gonna be high as cheese. I'm hoping it run. I'm hoping we get to 85 and then you could get you a $20 put and you might end up having 3 weeks on that trade for it to get back down to where we opened at. So hopefully we could get us a nice, even Mike said it, a nice run to the upside, clean up some of that, go pull some more liquidity from the the all-time high, and then we could turn around and get in a 565. Oh, again, whatever it opens at come Tuesday. So just pay attention to it. And that's all I really got, unless y'all want to look at some other stocks. Oh, Tesla. You probably out that contract now, right, Ben? No, I'm out it. Tesla did not do what I wanted it to do. Going into the weekly. But if it run, if like they do sometimes, it could be going back to 260. Can't fill this gap, goes back outside it. So it's possible it could take it up here to 270, especially if we're looking at a little run in the beginning of the month. But I like the sell thought of it better. So don't want y'all to get caught up in that shit. Because it could turn around at any time. Even me calling 585, that don't necessarily mean it's gonna make it up there. It could start selling before that. We're just looking for a red candle to close out the month. Like we get a little run on Apple. This is weekly. We get a little run on Apple. This would be 217 to be my monthly put for it, a 215 put. You're just trying to get some room so you could get a cheaper contract. But I can see Apple coming down here to fill this gap. It's the third week too for the gap. Right up in here, y'all. And this bias is solely on it being the month of September where we usually read. So my target is 217, 215. The price for the contract might be good now. Like I'm gonna go get me a monthly 215 right now. Or you wait, see if we're gonna get that little run that Mike spoke on, that I spoke on. Maybe go back to 233, 235, maybe go to 240 and then turn around and sell. But we're looking for that. We're looking for the run early so we could get in position to close out the month. Kind of hoping we in a red situation. 217 to be my target for Apple. These guys. I don't like this consolidation. That's still a little bit. Go to 390. I ain't gonna put nothing on that one. Microsoft doing a good job consolidating. And there's no gap there. So nothing else got. NVIDIA. Other trade that we take, NVIDIA closed inside this gap. Get out the way. I like this one too, y'all. $22 entry. NVIDIA go to 22. Take that down to fill its gap at 108. That might happen. I don't know. I'll be looking for that to happen this week, but I will get time on it. Again, what I was thinking is going to run first. And they earnings is out the way. So that's another good thing. Oh, no!